We start today's market talk. This new world disorder is defined by the coexistence of extraordinary opportunity and extraordinary uncertainty. This is what is defining the how the stock markets are behaving over the last 1 or 2 years. Rallies are narrow, nervous, and prone to violent reversals. So, as a market participant in equity markets, you have to keep both conviction and stop loss handy, because without conviction you can't buy anything, hold it, and the price action is so volatile that you have to have a stop loss also. Now, the market outlook, three things are basically what is happening. First is Iran war is back in full swing. So the Strait of Hormuz is closed. Conflict has spread to Red Sea. Brent crude is back above 100 a barrel. So if you see the Brent crude prices have gone up, and moment the Brent crude prices start going up, just three weekly candles, it is back to 100. The Indian equity is always correct. Uh, what is happening is because of this, Brent crude prices have gone up, the freight rates have gone up across the Strait of Hormuz. So the flow of energy across the world has reduced, and it is evident that US cannot achieve its aims by negotiations. So the option available to it is back to regime change, for which US has no appetite to commit ground troops. So this conflict is not going anywhere. Next is AI disruption. Now, how it is defining Alphabet, if you see their earnings, they have revised their capex projection higher to roughly $200 billion for the year. So the capex is taking place. That is defined. So the people who are going to benefit from capex are going to make money. But the problem is that Alphabet has turned cash flow negative, and investors are worried how long the massive spending will take to generate returns. So the AI trade, so if you see the Nasdaq has fallen twice, 2 weeks continuously, has come down to, last week it fell 1.62%, come down to its on the weekly charts to 20 EMA. S&P also fell, and you see KOSPI, it has fallen roughly 30-35% from its all-time high. So the AI trade is unraveling because there is a now some kind of uncertainty about the return on investment on AI. The third issue is tariff wars. So the Iran war was not good enough, so tariff war has started again. So Trump is threatening to impose massive duties on generic drug imports into the US from August 2028. So it adds another layer of uncertainty for the pharma companies, that is Indian pharma companies. So that was the only saving grace till now, and that problem has also started. Now coming to FIDI data, FIs are, if you see, they are short on index futures.
Which controls the markets, both planet and Mercury.
Just switch off your volumes.
प्लस both this basically Mercury होता है, Jupiter.
Switch off your volumes.
Basically जो intellectual things होती हैं, मार्गी हो जाता है, इसको बकरी and मार्गी actually now. Whenever the past history has shown that whenever it is going margi, the stock market goes up. तो ऐसा मतलब है कुछ तो
is my screen visible? Okay. So
yes, sir.
Okay, thank you. So if you see FIDI data, they are short on index futures. They have shorted Nifty index futures. So if you see here on Friday, they shorted the Nifty index futures. They have sold index call options, and they have bought index put options. So if you see bought puts, sold calls, and net positions in only options is roughly near 8 lakh positions. So they are strongly bearish, but it's a big positioning which is there pre-expiry. So in next 2 days, either they will roll it over or they will do so there will be a short covering. So they are massively short. So if you add the futures position, it becomes roughly 11 lakh positions, both options only on index for and futures. Then pros, they are long on index futures, bought calls, bought index call. Switch off your volume, please. Bought index call options, sold index put options. They are medium bullish. Then clients, they are long on index futures, sold index call options, bought index put options, and they are net long or medium bullish. So if you see right now, the FI's positioning of around 11 lakh short positions is matched by the clients and pros which have similar amount of long positions in the index options and futures. Now coming to for the month FIDI data. So if you see here, beginning of this week, the short positions were 2.2 lakh. It has increased gradually over the week to 2.71 lakh. And every day the markets went, every day they were bearish. And on Friday, at end of the day, there was some short covering and people would have booked profits. So the market bounced from the lows it made to 23,600. Now coming to the US. So if you see it, this is very interesting. US government bond yields are going up, 2-year yields. It shows that there is strength in US economic activity and the inflation is higher. So markets are pricing in a probability of a rate hike sometimes in this year. May not be immediately, but sometimes in this year. So it is going up. Now, along with this, the 10-year yield has also broken through the declining trend line. Now it was holding on to this trend line, it has broken. So long-term inflation expectations are high. Massive US long-term debt issuance is coming because they have to run their economy. And hence the bond buyers are asking for higher yields. Hence the yields are going up. And along with this, the dollar index also went up. So because there is in the times of conflict and uncertainty, there is safe haven demand for US Treasury markets. And there are headwinds for Japanese markets and currencies and euro also. So because of these foreign currencies are weak, the DXY is going up. Now result of this is gold, which is at its support, but it tried to go up and has corrected to around this 4,000 level. Silver, again, it is not able to go up, tried to go up above 60, corrected. It may, if the yields keep going up, it may test 50,000 also. And Bitcoin, again, it's stuck, tried to go up, it has corrected because the yields are going up. Now copper again is stuck here, so no momentum, because if the US bond yields and the dollar index go up, the metals and the precious metals and the Bitcoin, cryptos, etc. correct. And Dow Jones also, it has corrected for 3 weeks continuously. It corrected also. So now it is below 52,000. It had gone to 53,000 level. Now the impact on India. So if you see here, US dollar Indian rupee gone up. It is moving up. Nearly went up to 97, and then there was some action by the government, and then it came down. The bond yields have started going up. VIX has also started moving up. It is now above 14. So there is a issue there. Nifty 50, if you see on a weekly charts, it was a bearish candle. But there was some buying at the lower levels, that is roughly 23,600. Now, if you see the daily chart, on all 5 days it corrected and it has filled that gap. So this gap is filled right now, and then it bounced from there. So, and it is below all the moving averages. So it shows weakening momentum. Even the RSI chart is going down. Support is at 23,600, and below that, it may head to this level of 23,300 odd level. Upside resistance would be there where this moving averages are there, 23,950, 24,000. And I think the maximum call writing is also at 23,000 and maximum put writing is at 23,600. So I think expiry would be somewhere in between. Nifty Bank, again similar, bearish candle on weekly charts. On daily chart, it has slipped. It slipped below 200 EMA and then bounced back. So it took support at 56,000 and then bounced back from there. So support is at this 56,000 and 55,800 level. Resistance would be at this level, 57,400, 57,300 level. The reason for this dip is firstly the sentiment is poor, so the mid caps corrected, and the small caps also corrected. They were trending to go higher, so they also corrected. And HDFC Bank, it has reached the lowest level, clear fall for the 5 days after earnings, after a gap down, and possibly it may take support at this 720, 725 level. We'll have to see. If this level also breaks, then you may see levels below 700. Reliance, it went and took support at this 1250 level after the earnings. So all this hype after the earnings, if you see on Monday, people took it up, then it got sold off, and after that it has been coming down. So on Friday, because this was pulled up, so the markets reverted back. But let's see what happens. There is no momentum as such, and it is trending lower. Now coming to stocks today, I'll cover two stocks. First is Atlanta Electricals, leading manufacturer of diverse range of transformers. So it makes transformers from 5 MVA to 500 MVA. So all kind of transformers it makes: auto, power, inverter duty, furnace transformers, generator, special duty transformers, and used for various facilities and industries. It has 5 plants, 2 in Anand, Gujarat, then Bangalore, Vadodara, Gujarat, and in Bharuch, it has just taken over one company and now called it Atlanta Trafo Limited. So it has taken this up. So the total capacity is roughly 63,000 MVA. So they are trying to increase their capacity. And for this plant, there was a lot of fight. Everybody wanted to take over this facility, so they were successful in that. Now, what are the drivers for this stock? Growth is driven by healthy execution across domestic orders, higher capacity utilization, and continued demand from transmission and distribution and renewable energy sectors. Order book is roughly around 3,120 crore, up 97% year on year, 25% Q on Q, implying healthy revenue visibility over the next 12 to 18 months. The order mix continues to improve, with 220 kV and above transformers accounting for over 55% of the order book, including nearly 300 crore of 400 kV transformers orders, reflecting the company's increasing participation in the extra high voltage segment. For 400 kV platform, manufacturing of the first transformer is likely to commence over the next 2-3 months, with the mandatory short circuit test scheduled for early third quarter FY27. On the 765 kV platform, management expects to finalize its technology tie-ups during second quarters and third quarter FY27, following which prototype manufacturing and power grid revalidation will commence. Commercial bidding for 765 kV transformers, ICTs, and reactors is expected to open by fourth quarter FY27. So they are moving for where in the higher level of transformers, where the margins are higher, and they will get bigger orders. Dedicated inverter duty transformer facility remains on track for commissioning by end of calendar year 26. This will add another 5,000 MVA of annual manufacturing capacity to cater to renewable energy, BESS, and EV charging applications. Management expects overseas business to account for nearly 15% of the total revenue over the next 3 years. So what we need to monitor is, first, short circuit test clearance for 400 kV transformers, technology tie-up for 765 kV transformers, and third, the margin trajectory, how the margins move. So these are the things to be tracked. Now, if you see this quarter, the revenue growth, this is in millions, so roughly 48% revenue growth. And for the full year, it is expected to do around 2,485 crore revenue, roughly 34% over FY26. So as I showed you, the order book is roughly 3,100 crore. So it gives visibility of more than a year. EBITDA improved 58%, and it is at 16.5% because the last quarter is a bigger quarter, so the EBITDA margins reduced because of scale, but it has improved year on year, and profit after tax was up 50%. And for the full year, it's expected to be up around 39.7%. So if you see here, they are expecting to do around 283 crore of profit for FY27. And this stock is today at 12,225 crore market cap. So FY27 forward earnings are at 43 times PE right now. So it is not very expensive with the kind of growth it is having. And it has beaten the estimates. So that is one of the good things. So if you see, the order book has improved 31.2%. Sorry, it has improved 31.2% over this and has improved. Not 31. It is 31.2 billion. Sorry. So it is roughly 3,120 crore at end of first quarter FY27, and year on year it has improved 96.8%. Revenue increased 48%. Product wise revenue mix, so if you see, the biggest product is power transformer, and then inverter duty auto and others are smaller parts. And revenue mix sector wise, major goes to transmission and distribution. Order book to clock a CAGR of 26% over the next 3 years, so that is reasonable. So that means they are expecting roughly around 5,000 crore of order book by FY29, and they would be executing also simultaneously. Order inflow to ramp up once the EHV, extra high voltage transformers, final approvals are in place. So the implied order book is expected to go up. Expect revenue to clock 31% CAGR over FY26-29. So 30% growth in revenue, and gross margin to remain at current level, or maybe improve also, because EHV has higher margins. So EBITDA margins have expanded. As I showed you, PAT has jumped 50%. And PAT margins have improved. So if you see 10% year on year, it is an improvement from first quarter FY26. EBITDA to clock 34% CAGR over FY26-29 with margin expansion due to higher kV mix, so bigger kilovolt transformers. So EBITDA will improve. PAT to clock 40% CAGR. So if PAT is going at 40% CAGR for the next 3 years, you can easily give it a 40p, very easily. So if you see here, estimates expected to do around 35% revenue growth over the next 3 years. Margins are expected to improve from here, but generally remain at 19-20%. PAT is expected to grow around 40% from here. So this stock, if you see the charts, so we see the daily chart, this is from where the rally started. So it made a high of 2153, and it has retraced roughly 50%. So at this 1500 or 1512 levels, it is now somewhere closer to below 100 EMA is a decent level to get this stock. And then from here, you can add on every dip because of market conditions and all that. So this is a reasonable level. The stock had become expensive, but if you see a longer term, this is a decent business. The other one is Fineotex Chemical. It has a diversified business portfolio. Innovative specialty chemical company delivering technology-driven solution-based chemistry for its partners. So it is in oil and gas, textile chemicals, which is its basic business, FMCG, cleaning and hygiene, and water treatment. So they provide chemicals for all these sectors. Now, it's a leading manufacturer of specialty chemicals and auxiliaries predominantly servicing the textile and garment processing industry, pre-treatment, dyeing, printing, and finishing processes. So that is first part of their business. Second is they recently, in the end of last year, acquired 53% stake in Crude Chem Technologies (CCT), which provides direct access to USD 11.5 billion North American oil field chemicals market and materially expands its addressable opportunity. So now, just for information, it did around 770 crore of revenue in FY26. Now, CCT will contribute to Fineotex top line by 1,280 crore in FY27 and 1,650 crore in FY28. So, roughly, they will provide 70% of their revenue, implying a consolidated revenue CAGR of 47% over FY26 to 29. They have increased the installed capacity of CCT from 80,000 MTPA to 140,000 metric ton per annum. Expect improving textile demand across Europe, UK, and US, alongside continued scale up in FMCG, cleaning, and hygiene chemical segment to support steady core business growth. It can target water treatment applications in data centers, semiconductors, desalination, industrial effluent, municipal water, oil field water. It is transitioning from a predominantly textile focused specialty chemicals company into a diversified global performance chemicals platform. It has historically maintained an impressive return on capital employed in 18 to 25% range. Hence, it is not required to borrow. So it is able to do decent capital allocation discipline, which allows it to expand capacity via internal accruals while remaining virtually debt free. So good ROCE creates cash and by which it is able to expand its business. Heavy exposure to textile cycle leaves performance vulnerable to global apparel demand, down cycles and export sluggishness, but that's why they are diversifying their business to by acquisition of CCT. So if you see here, for first quarter FY27, they did nearly 175% increase in revenue. Gross margins improved. EBITDA, though EBITDA margins came down because chemicals used in oil have lower margins. So EBITDA was up 134 or 135% and PAT was up 93%. Now you will see that if the PAT is up to 48 crore and in first quarter it was 25 crore, so why is the EPS down? EPS is down because they did a bonus issue and stock split, bonus issue 1:1 and stock split 4:1. So that means they did a 5 times split. Hence, this basic EPS would have been rupees 2 plus if you compare. So it is nearly doubled. And it has improved over the quarter and quarter also because this is where the first time the acquisition of CCT came into play. Now, if you see, CCT unlocks access to USD 11.5 billion North American oilfield chemical markets, which is expected to grow at around CAGR of 5.6%, the total addressable market. Revenue contribution expected to scale to 73% by FY29. So this will contribute roughly 73% of the revenue of this company over the next 2-3 years. So the overall revenue will go up at least 47% CAGR over next 3 years because of CCT and full year consolidation to more than double total revenue in FY27. So the FY27, it is revenue is expected to more than double and then keep improving from here with CCT contributing to major. So if you see in the yellow it is there 73% they will contribute, while others and textile chemicals will provide 21-22% of the total revenue. Now, how it helps them is they have 4 plants: Mahape, Maharashtra; Ambernath, Maharashtra; Selangor, Malaysia; and Brookshire, Midland, US. So total capacity is 260,000 MTPA. Enable customized formulations across textile, hygiene, water treatment, and oil and gas. So if the basic, they are clear on chemistry, including polymerization, esterification, sulfonation, and phosphonation, which can be applied across textiles, cleaning and hygiene, water treatment, and oil and gas. So you can use the same manufacturing infrastructure and R&D base to serve multiple end markets, supporting better asset utilization and faster product development. Hence, they have diversified portfolio with customized formulations and fungible capacity. So adequate capacity is there. Revenue from oil fields to drive overall growth. Basically in FY27, after that it will stabilize. So the future revenue mix will be dominated by CCT. Gross profit to grow following CCT inclusion. So FY27 it will double, and it will dilute the margin initially, but then the scale efficiencies to drive recovery. So now if you see here, 772 crore of net revenue in FY27, it is expected to grow to 18,1819 crore and then increase from there to 2,250 crore and higher. So FY27 will be where the major growth is likely to come, with a possible profit after tax of 171 crore. Now what is happening here is they hold roughly 50% of the CCT. Hence, attributable profit is lower while the overall profit may be higher. But because of minority interest, it has been reduced to 171 crore. So at 171 crore of profit, with a market cap of 4,600 crore, this one is at a profit after tax of around 20. With this profit after tax, it's at a PE of around 27 times. So what is expected is strong revenue growth in FY27 and then stabilizing over the next few years, PAT growth of 50% plus. Margins will come down, EBITDA margins, and then they will grow. ROC is going to remain strong, so they would have decent cash flows. And PE has come to around 27 times, which is decent. And at present times, FY28 time, if you see, it is below 20. So the stock is attractive. Now, what happened with this stock? It was at around this 20 odd levels. Then it went up with good volumes. And then it took support at around 36 level. Now this earnings came on Thursday. So after the earnings, it took a bounce, went up to 44 and then sold off at end of the day because of the overall weakness, whatever it is, and has come down to support. Now took support at 20 EMA. So I would try to get this stock somewhere between 39 and 37 for a long-term holding, considering the potential this stock has in terms of growth and higher earnings because of the acquisition. I have finished. We'll take questions now.